Welcome back to my YouTube channel. In today's video, I would be talking about a very simple strategy which can be used for gold trading. Basically, traders are, they keep moving their strategies, like one strategy to another, another to a third one, and the problem is, what I've noticed is people don't keep their trading very simple. They keep it very complicated. Yeah, I mean, they have a lot of indicators, and they keep trying different indicators from MQL5 or many other third-party websites wherever they feel that if somebody tells them that here there is an indicator, there's an expert advisor, here there's a template, this that. I mean, to be honest, I have tried all of these things. Yeah, and the most wonderful part of trading is you only start getting successful in trading is the day you realize that you need to keep your charts very simple. Yeah, and you need to come back to basics. That is the most important thing. I have never seen any fancy or any such indicators or templates or expert advisors giving you an edge. The more you keep your things simple, the more wonderful they get. Yeah. So first of all, let's forget and let's try to get this in our mind and in our head that there is no single strategy which will give you 100% win ratio. There is nothing as such. We need to keep ourselves disciplined. We need to keep control on our emotions. We need to make sure that uh, we don't stress when we trade. Yeah, and the biggest loss for traders today, where people end up losing all their money, is because of averaging and martingale. I would never ever suggest, even to my enemy, that go for averaging or a martingale or grid. I mean, come on, these. Whenever you use such strategies, the broker loves you. Yeah, why the broker loves you? Because you are risking yourself, your capital, everything. The broker has understood that this guy doesn't know trading. This guy doesn't know from where to pick up entries, where to keep the stop losses. He's so horrible that he's just going to use the averaging and martingale strategies just to make sure that the trades are closed in profit, which never happens. Yeah, it can happen once, it can happen twice, it can happen the third time. The fourth time, I'm gonna end up losing everything. I have tried all these things from my 8 to 10 years of trading career, guys. The only thing which will give you an edge, which will keep you in success, which will keep your bank balance under control, is a risk to reward ratio, and the price action strategy is nothing more than that. Simple as that. Yeah. So in today's video, I would be showing a very simple strategy, very simple, and even the beginners, even the expertise, or even the moderate level traders can use it, and it's gonna work on everything. Yeah, but I would personally suggest, that if you are a gold trader, so use it for gold. Yeah, and if you wanna use it for major and minor, do it that way. Yeah. So let's get back on the charts and. Uh, Let me take the indicator here, which is going to be MACD, average, convergence, divergence. And the second thing what we do is we go down to a daily time frame. We make our trend lines. As I have mentioned in all my videos, whatever strategy I share with all of y'all will always be with combined with a trend line. I mean, I cannot stay without trend lines. Trend lines are the real edge to the market, and if you feel that you can survive without trend lines, I swear you cannot. Trend lines is the real edge. You have to masterize yourself in trend lines. You have to be an expert in trend lines. If you don't expertise yourself in trend lines, I mean, I'm sorry, you can't help yourself, because market will always move in the face of trend lines. Whatever the trend lines talk, whenever the market hits the trend line, whenever the wick, whenever the candle kisses the trend line, the market takes the price action. Yeah. So as I always say, that my below trend line will be green, the upper one will be red. Yeah. Okay. So now let me tell you all one more positive point which normally traders don't share. I mean, even the Most professional traders will never share this. Always ensure to keep your setup simple, number one. Number two, when it comes to gold, when it comes to BTC USD, when it comes to US 30, when it comes to Nasdaq, always buy. I never open my sell trades, never. I always take buy trades on these. Yeah, if I decide to trade in Euro USD, GBP USD, USD JPY, USD CAD, I mean, yeah, then I can consider buy and sell trades. But when it comes to these ones, gold, BTC, Nasdaq, I will always put buy trades. Yeah. So it's very simple, very simple. Uh, so the dark maroon or the dark red, let me just make it bigger so you guys understand. Yeah, this is not a, by the way, this is not a normal, uh, what you call, this is not the normal indicator. This is the indicator of trading view, and you will only get it in trading view. You won't find the same MACD in the MT4 or in MT5. It's going to be slightly different. I mean, it's not slightly different, it's way different. Yeah. So we will go with the always with the MACD one. Guys, always keep one thing in mind. Trading view is only made to view your charts. Your executions always happen on your on your MT4 or MT5. Yeah. So never end up reading your charts on MT5 or MT4. That's only meant for trading. Your your viewing, reading the candles, reading the wicks, reading the indicators, everything happens on trading view. Yeah. Okay. So talking about the MACD divergence, the dark red tells you it's a strong sell. The slightest pink tells you that the selling momentum has slowed down. Dark green, it tells you that the buying momentum is hot, it's full-fledged buying, and slightest green tells you that the buying volume has become less. And whenever these two, orange and the blue, moving averages, when the blue comes on top, the green goes below, that means the selling momentum is going to start. Whenever the blue comes down, above goes orange, that means that the buying momentum is going to start, or it has started. Yeah. So now let's go over here. Let's go towards the strategy. So let's say you have an M4, you have an H4, sorry, you have an H4 chart. You have a trend line. The market kisses the trend line here. And now you don't know what's going to happen, right? What you do is you come down on the lower time frame on H1, and you wait for the execution to happen. Yeah. Execution to happen in which way? So let me tell you the levels of this, which is very important. You see that the momentum is dying over here. Yeah. So on H4, what you need to do is you need to get into the market when there is volatility. Yeah. When the market is too volatile. If the market is not volatile, I mean, you will get stuck in a trap, or when the market is choppy, right? So you need to make sure that the market is volatile, the market is too volatile, and you get a perfect entry. How can you make sure that the market is volatile? Okay. Every time the market touches the trend line doesn't mean that you need to take an entry. You need to come down on H4 time frame, on H1 time frame. You need to make sure that there is a reversal, and you guys get to see a buying candle on H1. A buying candle on H1. For example, let's say over here, this was a perfect edge, a perfect edge in the market and a perfect signal. What happened over here? The blue went on top, the orange went bottom, and you could see over here that it gave you a perfect buy signal on H1 on the awesome oscillator, or the MACD divergence, whatever you want to call it, but it's a MACD divergence, a name in the trading view, so we will use the name as MACD divergence. Yeah. So The market went here, kissed the trend line, down the MACD gives you a dark green buying signal on H1, and the orange crosses below the blue. The blue goes up, you take your buy trade. Yeah. So now where should come your stop loss? Your stop loss should be under the trend line. And as I mentioned in my previous video again, for stop loss and take profits, you can always use your M15 support and resistance of Lux Algo. Yeah. So in case if you guys didn't watch my previous video, it's going to be in my favorites. Yeah, here it is. Yeah. So we go down to M15 and we plotter our take profits and stop losses based on, here you go, this was a signal, right? Yeah. So we put our stop loss here down on this support, and our take profit levels can be one, can be 2. So it's a wonderful risk to reward ratio. You lose very less and you make more. I mean, this is going to be like 1:4. It's going to be 1:4. And similar like that, you can see multiple examples again over here. So you know that the market went up, it came down, went up, came down, and this part the market was dancing. Yeah. And then suddenly when it touched the support and it shooted up again, and you see over here what the market did, what the MACD divergence did over here. It gave you a very darkish green bullish signal again, and see the moving averages. I mean, they're skyrocketing, right? They went up a lot. So you can use the same formula again for the risk to reward ratio with the Lux Algo support and resistance, and you can plotter your stop losses and take profit. So that's a very simple strategy, guys. I mean, trust me, I know people who are making a lot of money. A lot of money means like their caps are more than $100,000, guys. $100,000, and they keep it very simple. They just make their D1. Always keep in mind D1. Yeah, don't start making your trend lines on H1 or on H4. I have made on H4. Why? Just to give you all an example. Yeah, but I also, even I have mentioned this in my previous video, that whenever I make my trend lines, I always make them on daily time frame. And when do I make them? Okay, so that's a very big question. I make my trend lines basically when the market shutdowns, which is Friday night it shutdowns, Saturday and Sunday. I have 2 days time to make my trend lines. So I make my trend lines, let's say on Saturday. On D1 time frame, I'm gonna, because I usually trade on gold, BTC, US30, US Tech, and DXY. So I mean, for some premium members who would really like me to give analysis, I make for them even on your USD GP, USD JPY, USD CHF, AUD USD, USD CAT. Yeah. So I make trend lines on D1 time frame. Why? Because the trend doesn't changes so fast. It doesn't changes very fast. I mean, it's gonna last at least for 3 days, for 4 days, for 5 days, right? So the negative advantage of, I mean, the minus point of making it on H4 or on H1 or even on M30 time frame is the trend is going to change very fast. The trend lines will be broken, and then again you have to make new trend lines. So it's going to be waste of time. So I would always suggest to make your trend lines on D1 time frame, and make your trend lines on D1 time frame, come down to lower time frame, see when the candles are kissing the H4 trend lines, when they are kissing the H1 trend lines, and you do your executions based on awesome oscillator MACD bullish and bearish signals, ensuring that the blue moving average has to cross orange or orange has to cross the blue, and that's it. Your stop loss, take profit has to be aligned with support and resistance of Lux Algo again. Yeah, so you can plotter them very easily. Make sure that never take trades where you lose $50 and you make $10. I mean, that's going to be bullshit, right? So just ensure that you end up losing $10 and you target $50. So in that case, even if you get 2 take profits, you're gonna skyrocket, right? But if you have 5 stop losses, nothing is gonna, just gonna lose $50, right? 5 stop losses means $50. And if you end up making 2 take profits, you're gonna make a lot of money. So your risk to reward ratio has to be good. Never go with 1:1, never go with 2:2, never go with 3:3. I mean, in that scenario also you might end up losing more, right? If you don't get a take profit, my god, you get a stop loss, you're gonna end up losing more. So try to take a smaller stop loss and a bigger take profit. Yeah, and that's what I've showed you how to do it. You can do it with the support and resistance by plotting the stop losses and take profits. You can see which is the lowest support level, which is the highest resistance level. Yeah, on M15 again. Or if you want, if you feel that you're an expert and you know that the market is going to go until this level, then you can take M5. But I would personally suggest you that if your trend lines or your candles are kissing the H4 and H1 trend lines, if your candles are touching, your wicks are kissing the H1, H4 trend lines, I would suggest you to take your take profits and stop losses as per M15. Yeah. So that's it, guys. I mean, this was a very short video just to make sure that you keep your trading very simple. And this is going to work for everything. Everything means everything. Whether you're trading in US stock, Indian stocks, Nifty 50, Tata, Reliance, natural gas, copper, sugar, coal, Forex, major, minor, indices, cryptos, everything. So that's it, guys, from this video. I hope you all liked it, and let me know if you have any doubts. If you have any questions, do ask me. I would again beg all my fellow followers, keep things very simple. Your charts very simple. Make sure that whatever strategy you use, whatever strategy you want to play on, your trend lines have to be the first thing. Yeah, trend lines, support and resistance, and then if any additional indicator you want, you can use it. So that's it from this video. Thank you so much, and let me know what are your thoughts, feedbacks, and what else you all are expecting for me to share or to make next video on. I will really help you guys. Thank you so much. Take care. Stay blessed. All of you all. Bye bye. Bye bye.